Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, we've talked all week long. We talked about the scenario, and it's played out to a T. We had the Friday low down at 12.5. We made a higher low at 16.75, and then we spent the first half of the week battling over a little bit, but then basically converting the weekly pivot at 24.28. We explained that if those things happened, what we were left with as we headed into the latter half of the week was we would be staring at the new all-time highs. Wake up this morning, we're trading 39.75. Overnight, we traded as high as 40.75. So we're just a few handles off of that. You've got the Fed today at 2 o'clock. Whatever happens after 2 o'clock should be interesting, but I would be very, very surprised if we didn't do new all-time highs into the Fed, either this morning or in the anticipation up until 2 o'clock. What happens after is what happens after. I will give you the same speech I have given many of you for years. Don't game the Fed. Don't walk in and say, well, I think the reaction to the Fed will be X, because you don't know. Because it's just you, and you don't run a cajillion dollars, and you can't deploy a cajillion dollars, and if you could, then you could move the market. But since you can't, what you need to do is identify the range, the reaction range, and then, this is how we trade it in the room. You identify the reaction range, you see, are we ping-ponging, between the high and low of the range? Are we making lower highs? Are we making higher lows? Are we breaking out? Are we breaking down? In that exercise, you can identify risk and you can find a trade. In betting everything on black at 1:58 in the afternoon, you're either going to be right, in which case you will take it off so fast it's not even funny, or you'll be wrong, in which case you'll let it ride and ride and ride because the trade you took has nothing to do with price or risk. It has to do with you being right or wrong about your prediction about what the Fed was going to do, and you will ride your opinion into the ground. Don't be that person today. Let's hop out on the hourly chart. So you can really kind of see, and I'm going to zoom. You can see it all here. You see the Friday low. You see the higher low. We've mapped it all week. Over weekly pivot support, off we go. As advertised. People choose to fight at different points along the way. I got chewed up a little bit myself in the afternoon. Afternoon got very whippy. The morning was fine. I mean, your morning trade, you had a nice short down to the weekly pivot and then a nice long. But once we got into the latter part of the day, they really just kind of whipped and chopped around a little bit, picked everybody's pocket, pulled back slightly into the 35 area, and then up to make a higher high versus yesterday's high of 39.25. So at this point, all that's left for the bulls to do is get over the top of 43.5. Nobody can really take the bears seriously until they convert 28. There really isn't anything else. People can talk about reversals and they can talk about this and they can talk about that. But until the bears can convert a meaningful price level and keep it converted, it makes it very difficult for shorts to get any real traction at all. You can take it for a trade, but you've got to understand that until these meaningful levels get converted, that it's counter trend. As long as you understand that it's counter trend, as long as you're taking profits along the way, you'll be fine. I was short as we came into the weekly pivot yesterday, but you got to recognize that it's weekly pivot and it's not breaking. So I took the short off and I got long 30.75. So it's a situation where if the bears aren't producing, you instantaneously need to severely question what they're doing. severely question whether they can accomplish what you're kind of hoping they can accomplish with your trade, roll your stop down. Don't be hesitant to flip, because what you can do if you're out, okay? Say we had kept going at 28. And this is the kind of stuff we talk about in the room all day long. You know, I do that. I do this to teach people, you know, how to trade this stuff. Let's assume I jump out of my short, I get into the long, and then it breaks 28. What you do there is you know, you're long and you shouldn't be. You take your hit, and then if 28 gets converted, you go ahead and just get into a different short with 28 as your risk marker for a deeper move down, probably to test 1675. Well, 28 minus 16 is like 12 handles. So the -1 or the -2 that you take up here when you're trying to get in tune with the market, not a big deal. Okay? It's cutting the losers and getting in tune with price. So I was short, couldn't take out 38. I scalped it off, I think, for a +2. Got long 30.75 and got into a very nice trade. You've got to be flexible in your approach. This is not a time to get ideological. It's not a time to get stubborn. It's not a time to dig in, especially on the short side. All right, everybody have a fantastic day. I will catch you for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.